So very good afternoon and welcome back to the last session of the day. And on behalf of CII, sincere thanks to each of you for having joined us today at this conclave and your active deliberations. So we have a very diverse topic for discussion in this last panel, all of which are highly contemporary ones. And to my left and right, I have the people for whom I don't think any introduction is required. Rajesh on direct taxes and Vaidishwaran on indirect taxes. And to my extreme right is Anandi, partner in Deloitte, who's in the area of practice of audit. And to my extreme left is Pratish, who's come from Mumbai all the way for us. So he's part of the KPMG team, and thank you, Pratish, for traveling all the way from Mumbai and to be present with us. He will speak to us on the topic of ESG. So 4 diverse topics, and I know it's a very difficult panel to moderate, with the best of the subject matter experts being there here. What I've thought is to make it very effective and taking a hint from the previous session, where I saw the participants very interactive and asking some very good questions. We will run this session with 5 minutes opening remarks from each of the 4 panelists. And with the help of the panelists, I have put across a few questions with which I can interact with them. Then I'll leave the floor open for 10 to 15 minutes. And then at the end, I'll take the liberty of sharing the concluding thoughts. So with this, let me invite Vaidishwaran for his opening comments. Over to you, Vaidi.
Thank you. Good evening, MPV and friends. What do you say with GST in 5 years? It's really a long journey, and it's been a sweet journey to a large segment of businesses. Of course, you will have a bag full of complaints about the existing law in certain formats, but I would always say step back and go prior to 2017 and see where you were. So you dealt with some 13 indirect taxes with different laws at central level, state level, and probably even municipality. If they had a chance, they could do it. Each law had its own set of legislation, rules, and notifications, and some in vernacular. And you had to deal with it across the country. And you also had to deal with unbelievable cost cascade. A tax cascade, or rather. So an effective, in fact, I do see a lot of this memes in the public domain that GST in India at 18% is extremely high on certain set of items. Prior to GST, it was around 36%. The effective rate was 36% if you calculate your excise duty, your CST, your entry tax, your VAT, your surcharge, your additional surcharge, and everything, no credit element at any stage. So from 36%, we have really moved on. And I would say that we have achieved something brilliant in terms of one nation, one tax. The very fact that the rate is common across the country for all goods and services. You may have disputes on classification, but the fact remains that the dispute is also uniform. It is, you know, it's just not you having the problem. Everybody else has the same kind of problem. So it's like your days of, when you have a power failure in your flat, you immediately open the door and check whether your neighbor also has power failure. So GST is like that. So it is good and bad in equal terms. So I would say that the first 5 years has been a real journey of learning from the government and the industry. Both of them have learned, both of them made mistakes, both of them rectified it. There has been significant course correction. And I think the numbers justify it by now. I'm sure the collections are well known to the audience. So it's there to stay. It can get improved. We'll talk about it a bit later.
Thanks, Vaidi. In fact, when you were telling 5 years, for some reason I thought it's been a law there for a long time. You know, I didn't realize it was there for only 5 years. It looks like it's been for at least 20, 30 years. So that's the kind of impact the law has had on all of us. And the other good thing about GST is the kind of digital transformation, you know, the scale of digital transformation. It's almost like a startup which has scaled up so big. I think such a big thing which has happened. So Rajesh, over to you for your opening thoughts.
Good evening. As Mr. Vaidishwaran mentioned, like indirect tax, even direct tax, we have seen a sea change. I don't know how many people had filed the returns, both corporate as well as individual returns, in the past few months. You would have seen that the returns are processed on the same night. Next day, you would have got the intimation. Even the refund has been processed quite quickly. Within a couple of days, the refund has been issued, which we have never heard of, right, in the past. When we presented this to the judge was surprised. She was not expecting that the income tax department would be acting so fast. We went for a case where we wanted to ask for a stay of adjustment. So that time she was quite surprised. So the only challenge there is that when they are processing the refund, if there is an outstanding demand, they go ahead and adjust that refund against the demand without looking at the veracity of the outstanding that is there. So that's the challenge that companies are facing today. But otherwise, the process has smoothened, and I think it's going at a much accelerated pace. One other thing we have seen, I think one is from since there are finance professionals here, I thought how the finance professionals, the companies are looking at the tax function. We did a survey, the global survey, and we interviewed the finance professionals, and the feedback that we have got is that there are three areas in which many of the companies are focusing on today. One is they are looking at outsourcing the tax function. Almost 35-40% is looking at doing that, because with the dynamism in taxation, right, with the changes that are happening, it becomes increasingly difficult for companies to manage on their own with the in-house team. The other one is the automation. So if there is in-house team, they are looking at how they can automate it more, so the process can become simpler, and you also have a greater participation of tax function in the decision making. The third one is again building the GICs, right? The in-house centers in places like India, where the entire tax function is being done out of India. So that's another area where companies have been focusing on. So this is the trend from the company side. If you look at from the government side, what government has been looking at, the primary aspect is to increase domestic manufacturing, right? Create more job opportunities for people. And then create the concept of Make in India. So these are the themes that are being, and rationalization and simplification of tax laws. That becomes quite critical. And also the other area is on climate action. So some of the major steps are taken in this direction, where tax is also playing a role. So if you look at simplification and rationalization, you would have seen the message from the outgoing revenue secretary. They are looking at rationalization of capital gain taxation in the coming budget. And also the individual taxation. Today we have two slab systems, right? Optional one. I think there will be further thrust on looking at moving towards non-exemption based simplified tax system. In corporate tax, you would have seen there is a 15% tax that's been introduced without any exemption being availed, and it removes the complication of MAT also. So these are the changes that are being made to simplify. But at the same time, I think some of the requirements of the country in relation to R&D, earlier there were incentives available, but today those incentives are being withdrawn, and the lower rate of taxation is being introduced. And at a global level also, we will discuss that later. At the global level also, there is an alignment on how the tax system should evolve. So this is on income tax.
So thank you, Rajesh. And just for the participants, we have among the best of the subject matter experts on indirect tax and direct tax. Both of them, with due respects to both of them, and Vaidi, a very close personal friend. So both of them have now spoken at a 30,000 feet level. Please use the opportunity for more specific questions which you would like to ask them relating to your industry or a common class dispute which is there. So I would like to keep as much time as possible for the participants. So as Anandi and Pratish introduced, if you would like to get some of your tax aspects clarified, so they are available. I'm the moderator, and till 4:45 they are under my mental custody, so they will respond to any queries you might have. So please feel free to ask and get the necessary clarification. So let me now turn to Anandi. I'm not too sure if everyone is familiar on this very important development from 1st of October 2022. And for all the senior professional accountants who are chartered accountants, and for the practicing chartered accountants. For those in industry with reference to public interest enterprise, which is listed and whatever category which is there, we have this provisions called NOCLAR, which are applicable from 1st October 2022. It is non-compliance with laws and regulations. And it's so very important for people in industry, people in practice, any case because of their audit responsibilities, etc., they are required to take care of it and report. But let's take, for example, I as a CFO of a company, I come to know in my organization that there is non-compliance with reference to, let us say, an FDI matter or a FEMA matter or any other applicable legislation. I am duty bound as a chartered accountant to report it. So there's a mechanism for that. So that's a responsibility cast on every senior professional accountant. So it's a transformational one. There could be some who might have reservations on, isn't it onerous, etc. I have my own personal views on that. If such a situation arises, I will share my views. So with this little introduction, over to Anandi for this.
Thank you, sir. Good afternoon, everyone. I think Mr. Vijay Kumar has beautifully summarized what is NOCLAR all about. So we have always heard about non-compliances with laws and regulations, and ICAI has a code of ethics which has been prescribed for all the chartered accountants, whether in practice or in service. With regard to if we as chartered accountants come across any non-compliance with laws and regulations, there was no clear framework available as to how we will respond to such non-compliances and what is the responsibility of a chartered accountant under these circumstances. Of course, with regard to chartered accountants in practice or professional accountants in practice, there was a framework available in terms of any non-compliance with laws and regulations relating to the financial reporting process, which they were duty bound to report as part of their audit procedure. However, with regard to the professional accountants who are otherwise in practice or in service, there was no framework that provided clarity on what is it that they need to do when they come across any non-compliance during the course of their service or practice. So Section 260 with regard to Section 260 of the Code of Ethics, which deals with responding to non-compliance with laws and regulations for professional accountants in service. When I say in service, it means chartered accountants who are employed in an organization. How do they need to respond to any non-compliances that they would come across during the course of their service? And Section 360, which deals with a framework for responding to such non-compliances by practicing chartered accountants. So these two sections were notified when the Code of Ethics got revised in 2020, but the applicability was deferred and has now been made applicable from 1st October 22. Currently, it is applicable to the professional accountants who are associated with listed entities. So it's still not been extended to other unlisted entities, but when you say listed entities, it also covers subsidiaries of listed entities. So you need to be very, very cognizant of the new responsibility that has been cast on all professional accountants in India. So the question arises as to who is a professional accountant when in service, because an organization would employ several chartered accountants. Does it apply to every chartered accountant who is working, or is it limited to certain professional accountants? I think the framework clarifies that this is currently applicable to senior professional accountants in service, while of course in practice it applies to all the professional accountants, needless to say. But in service, it says it is currently applicable to senior professional accountants. You might have questions on who these senior professional accountants are, and if they come, what are these non-compliances that they need to report? How do they need to report? Whom do they need to report to? What is their responsibility? These are some of the things that we will be discussing today as we move forward. I think there will be a Q&A session wherein we will be diving deeper on the responsibilities. But while the responsibility is directly cast on the practicing or professional accountants, I'm sure everybody should be cognizant of this role and responsibility, and the spirit in which this responsibility will have to be exercised, the policy which each of the organizations should have, and how they need to implement this particular code of ethics is something we will be discussing in today's session. Thank you.
Thanks, Andy. And we come to the hottest topic for the decade, and I see all of you an average age of maybe 30 or early 30s. I don't think any of you is spared from listening this term ESG and discussion about ESG. The next 10 years in every forum, every platform, if there is something which will keep bugging you to such an extent that you will feel that it's better to comply with it, you will be bugged to that extent, and that's going to be ESG. So thanks, Prathimesh, for coming all the way from Mumbai to share your thoughts here. And on ESG, I'll just share two points before Prathimesh can talk to you. First and foremost, there is a general impression that ESG is a topic for large organizations consuming fossil fuel. So those kind of thoughts are there. But please note, ESG will become the way of life and a minimum requirement even for the SME organizations, because almost all large organizations, as part of their vendor ecosystem, they procure from the SME. If the large organization is to say we are ESG compliant, it's important their vendor ecosystem should also be compliant. There are things called scope 1, scope 2. There's something called scope 3, and you'll be surprised that in scope 3, none of us can touch this water bottle which is there in front of you also. So that's the kind of requirement which is there. And almost all of us have to turn vegan also if we have to go to scope 3. So those kind of things are there. So please don't be under the impression that ESG is for some larger organizations, BRSR and all. It's applicable for the smaller ones as well, and that can become the distinguishing factor of whether you can retain the relationship or not with your customer whom you are supplying. The second point I'd like to share, I'm sure Prathimesh will give more insights on that. At this point of time, many see ESG as a reporting requirement. Like financial reporting, this is also a reporting requirement. It is not reporting, it is a way of life. The way you live, you have to communicate in the ESG reporting. But ESG is all about the way an organization lives. So that's the important 2 points I thought I'll share as part of the initial introduction. And over to you, Prathimesh.
Thank you very much for introducing the topic. ESG is not a new topic actually. You know, we have been talking about environment from the time we existed. We have been a social animal, right? We are part of a society, and to lead a good society, we need a good governance mechanism. So ESG is not a new topic, but the terminology ESG was coined in the year 2004, when the then UN Secretary General felt that the role of organization is definitely to make profits, but it is equally important how are they making profits. Are they taking care of the environment from which they are extracting the resources? Are they taking care of the society which is supporting their growth? And are they well governed so that they have a continuous ability to make profits? So it was coined in 2004, and now fast forwarding it to 2018 or 2019, we have been monitoring the risks. Every country, every organization do monitor risks. So if you look at in the year 2010, and the World Economic Forum typically comes up with a risk register every year before the meeting in Davos. So if you look at the risk register in the year 2010, more and more risks were aligned to the economic performance of the society and of the organization and country at large. Fast forwarding into 2020, more and more risks are with respect to environment. Risks related to climate change failure, risks related to water availability, migrant labor crisis. Now take any risk, on this society, on the environmental part, and bring it back to your organization. It has a direct bearing on the financial performance of the company. A good example out here, when I used to talk to a lot of service sector companies, that ESG is equally important to you, and you are also part of this spectrum which needs to be getting aligned. And people used to think that it's, as Mr. Vijay said, that it's primarily was considered to be for the companies who are polluting in nature and are from the extent to industries and all. And I gave this example to the IT sector, typically the service sector, and said it is applicable to you also, and they were saying no, it's not applicable to us. And then the Chennai floods happened. Yeah, the entire corridor, IT corridor, was non-functional for almost 7 to 8 days. And I was just looking at some statistics itself. In 2019 itself, Tamil Nadu had to suffer 3,500 crores of losses because of the floods. Now, every environmental activity or every environmental issue impacts your financial performance, impacts your social performance. And hence, it's important for companies to take into cognizance on how are they taking care of the environment, how are they bringing in the bridging the societal activities, and how are they governing themselves so that they can make continuous profits. Secondly, if you look at it from the ESG, from the leader's perspective also, we did some analysis and came up some with statistics. So today, if you look at 90% of the CEOs are at least aware that they need to do something about ESG. Yeah, they need to take care as they are moving as a part of their business strategy. 56% of the customers, again, the customers whom I'm talking are millennial in generation, they're ready to spend a little more amount if the company is, aligning to the fair trade practices, or if the company is taking care of the environment. And the wealth, around $38.6 trillion of wealth, or, is now, aligning to ESG, that the assets under management are aligned to ESG. And not to forget about the millennials who are, going to inherit a huge amount of wealth from their fathers in the next generation. And this, generation wants to make profit, but they want to make profit with purpose. So that is where we are aligning now. It's everyone's agenda, it's everyone's responsibility, because if one person do not do it properly, we will not see the success which we want to see. And not to forget, in India, from the India perspective also, there are a lot of regulations which are coming. So SEBI has now mandated the top 1,000 listed companies to come up with a business responsibility sustainability report. Now, as Vijay was saying that, yes, reporting is the end of the spectrum. Yeah, it's actually the report, what you do in the entire, you will just publish it to the larger audience. But the activities which are aligned to ESG is what will make a huge difference. And that is what would create the value for the society at large over a period of time. So I'll just pause it out here and maybe we can take some questions.
Thanks, Pratimesh. So see, Vaidishran, a little high-level question, and as always, from your very candid answer. The law has been there for 5 years, even though I can't accept that. It's still like it's been there since long. Do you think it has achieved from the objective of the industry, the end consumers, and the government? Whatever objects have been set, have they been achieved, or how far are we from that?
That's a nice question because it involves a broad spectrum of all the stakeholders in terms of GST and their response and their reactions. If you take industry, I'll put them into 2 boxes. So let's talk about competent GST managing industries who have dealt with GST, who have understood GST, businesses which are large, businesses which are able to have a team of professionals to help them, quite knowledgeable in terms of the pursuit of the new change that happened. And then the second box, which has a combination of SMEs and MSMEs, who slowly stumbled and got to this GST system and limped along, fell down, got up, limped along, and still limping along. So if you look at these 2 boxes, if you look at the first box of manufacturers, in that sub-box of manufacturers really gained. You got out of a very complex, archaic excise system. You got out of a factory regime. You got into a supply system where everything was transparent and your credit system, your ITC simply boomed because your pre-GST regime had this artificial test for eligibility of credits. You have to use something in manufacture. And then there will be a debate as to whether it has been used in manufacture or not. And you'll have 20,000 case laws as to whether it is used or not. So that was a mind-boggling litigation which kept on hurting the industry because they keep on fighting the same matters again and again. So biggest change in GST was the profile of ITC. Today, if you look at a company, they don't even hesitate in taking the ITC. Furniture I can take, anything which I use in my business I can take. That is a vast difference from the erstwhile era of nexus to manufacture, nexus to output service, nexus to trading. So the nexus test has completely enlarged, the canvas has completely become bigger, and that is a big boon for a manufacturer in terms of cash flows. Because today, all said and done, all of you are finance professionals, ultimately it boils down to cash flows. So your ITC pile becoming bigger and bigger has changed many manufacturers, and now it's a different kind of worry for a manufacturer. I have big clients who come back and say that, sir, what do I do with this ITC? I have some 60 crores sitting in ITC, is there any way I can encash it? And if they're not able to encash it, they're upset with the system. The earlier days, they couldn't get so much of ITC, was never an issue, but now that they've got the ITC, they want to encash it. Fair point. So manufacturers definitely have gained, traders have gained, because if you take a trader, he could not take the credit of service tax and set off against VAT. So that was his cost. All that is gone. Service providers, chartered accountants have gained, because you buy your laptop, you buy your equipments, you buy your aircon, all of them came with the VAT. And you cannot use the VAT to pay your service tax for your professional services. So now you can take GST against GST. So the simplification of all the taxes, or merging of all the taxes, and having this side GST and this side GST has really changed the game for industries and professionals. Now coming to this MSME and SME segment. One, they struggle on account of cash flow still because they have a simple problem of not getting the money in terms of GST requirements. For example, if I'm an MSME and I raise an invoice in the month of December, I have to pay the GST by the due date in January. But my credit cycle could be 45 days, even under the MSME Act. So under the MSME Act, there is 45 days available for the manufacturer or the buyer to make this money, but I have to pay the GST before that. So where do I fund it? No bank funds the GST. So the GST component becomes a single most painful point for most of the MSMEs and SMEs. It's a cycle. And the peculiar problem of GST is that, unlike the pre-GST laws, if you don't pay the tax, you can't file the return. So unless you pay the tax, you'll default in your return. So 1 month you default in your return, because you don't have that much of money to pay the tax. Let us say you have a liability of 10 lakhs and you have 8 lakhs of ITCs available. 2 lakhs cash, you have a shortage. You will not file the return. Next month, unless you file the previous month's return, you cannot file the return. You don't file the second month's return. Third month return, you don't file. The department or the portal comes aggressively at you and tries to block you. And then your buyer says, you are a negative list vendor. I'm not going to deal with you. So just like, ESG, changing the profile of vendors, GST has already changed the profile of vendors. So today, if you're not GST compliant, if you're not a vendor who's complying with GST, most of the bigger buyers don't look at you. They don't deal with you. So that profiling of vendors has happened because of GST. In a way, it is good for the system. It is a reform in the system. It also hurts a lot of businesses who are not used to this kind of system. So that is as far as the industry is concerned. Government, they are smiling all the way to the bank. In fact, I've been talking about GST for eons together. In fact, we've been discussing the format of GST nearly 15, 16 years ago. And the biggest challenge at that point of time, and even when GST came, was we felt that manufacturing states might lose out. Tamil Nadu, Karnataka, Maharashtra, Gujarat might make a lot of losses in GST is what we all perceived. Even the government perceived that. And surprisingly, they didn't. We didn't realize that the service consumption was significant. And GST, being a large-scale supply chain tax across the entire system, the governments also gained significantly. You would have seen the numbers. Consistently, the numbers are going up. In fact, in the tea break, somebody was asking me, since the numbers have gone up so much, why can't the council decide on reduction of taxes? This is a ripe time for reduction of taxes. Maybe it will happen at some point of time. But my concern is whether the revenue is going up genuinely on account of business factors only, or is there an element of inflation to it? If there is an element of inflation to it, then the government would not so easily tinker with the rates of tax. So there will be a rate of tax alteration, but it will not happen immediately. But definitely on the cards, there is definitely a rationalization package that will happen as far as rates are concerned. But government has gained big time. Another thing government has gained is that mapping of data. Today, the analytics which the government does at the back end is phenomenal. The portal, despite whatever it was, still throws out interesting data. And today, the notices are immediately issued through the system. So if a person is defaulting, as I said, 2 months of return, in the pre-GST regime, you will default for 3 years of returns, you will not even be in the system. Nobody will flag you till somebody points out that you have not filed returns for 3 years. So the system has become robust, system is able to track it, and system is able to nudge you, urge you, and make you comply with the law, which is significant data point for the government. So government is able to look at it intelligently and focus on core evasion segments, and then look at how to address that. So that is a really big gain for the government. Coming to the consumer, if you look at some of the countries which have implemented GST, they've all gone into inflation. They've gone into big time inflation, and a country like Malaysia had to withdraw GST. They introduced GST, one of the most complicated regimes of GST in terms of rate of tax, and then they withdrew it. They went back to the old sales tax regime. So countries have suffered inflation big time. India has not suffered inflation. If you go back in terms of 5 years history, even the first year of implementation, we didn't have that much of, it didn't have inflation because of GST. You could have inflation because of other factors. So what really did this magic? Even though I don't like it, I don't like the existing system, I think that system probably helped. This existing system of multiple rates actually probably helped it initially. But multiple rates is a menace, because multiple rates leads to classification disputes. You will debate forever whether chapati and parota is one and the same. And you will have at least 4 advanced rulings which are conflicting with each other. So you will have all kinds of disputes flowing around in that segment. But then that helped initially. Probably now rationalization time has come. They could probably box many of them together. But inflation was arrested because of some clever planning in terms of understanding which are causing inflation and having a low rate of tax for that. Second, I don't know how much, most of you would be aware that there are GST experts in this room, there are GST experts in industry, and there are GST experts in WhatsApp. Okay? So there are 3 kinds of experts. This third expert does not know GST, but is very good at forwarding messages and sharing as much knowledge as possible. You'll suddenly get a message saying that if you buy for 5,000 rupees, it is 15% GST. If you buy for 10,000 rupees, it is 12% GST. If you buy for 20,000 rupees, it is 8% GST. One client sent to me and said, is it so? I said, is it fair for you to ask this question? So these WhatsApp experts are unbelievable, but they spread the image of GST, that GST became popular across the country. No tax law has become as popular as GST. Today, every person talks about GST, whether they are an assessee or not, whether they have an impact or not, whether they would know anything about GST or not. In fact, you still have media guys asking me this question. Is it very unfair on the part of the center to keep all the GST themselves and not give anything to state? Forgetting the fact that it is a levy by both center and state. But you don't explain, it's not easy to explain this to in a channel. But those are the type of questions. So the publicity was so much that it became popular and unpopular. So whenever a person went into a restaurant in July 17, he sat in the hotel, ate something, took a photo of the bill, and then published it, posted on Twitter. GST is 12%. India is killing food. All kinds of slash, etc. It just followed. So government became sensitive, and then therefore they came with this idea, let us mess up the GST system by ensuring that the rate comes down. So all hotels and restaurants, except of course these kind of hotels, 5% GST without ITC. Nowhere in the world we have a rate of tax without ITC, but we have redefined it. So first of all, hotels and restaurants are now with 5% with ITC, then some airline segments again without ITC, then your real estate came with 5% without ITC. So now it has completely changed the profile of GST, but the consumer still gains because 5% is much, much comfortable compared to what kind of rates we pay in hotels across the world. The food is quite costly in most parts of the world, but India has probably achieved at 5%, which is something phenomenal. So wherever it is pinching the consumer, if you look at it carefully, the rates are not so significant. But it pinches the consumer indirectly because of rates being high elsewhere. For example, if you take real estate, a developer pays 5% GST, consumer is very happy, but the developer does not get ITC. Cement is 28%. So if you don't get ITC, your cost goes up. If your cost goes up, your selling price for the flat goes up. Buyer is still happy because GST is only 5%. Government's logic has worked. So consumers have gained in that sense, but really speaking, inflation has not happened because of GST.
Thanks, Badri, and so beautifully articulated. I don't think anyone could have articulated as well as you did. So Rajesh, as part of your opening remarks, you shared a few of the measures taken by the government with reference to attracting investments. On the tax administration side, what are the initiatives you are seeing and what's been the success of those and what's forthcoming?
Right. The government has taken a lot of steps, but even today, the foreign companies hesitate to invest in India because India is perceived to be a very complex tax regime. So some of the steps that are being taken is, you would have seen, the first one is the faceless assessment. I think that's in a way eliminating the process to go over to the office and getting influenced by the discussion that's there. So faceless assessment is one of the measures that is being taken. It has some teething issues, but eventually I think it would be one of the convenient system that would be available for all of us. The second aspect, you'd have seen that VSPV got introduced. Many of the tax disputes got resolved during that process, but still there are plenty of cases that are there. So that has not been resolved. So the other thing is that by changing by making the corporate tax attractive with 15% and 22% and eliminating the deductions and exemption, the scope for litigation in future has been brought down. Still you would have some issues, but I think the scope would be limited. So that's another area where government is trying to reduce the litigation. The other one is that where there is an issue which is at the appellate authority, if the same issue is persisting in the subsequent years, so they should hold back rather than creating an appeal for multiple years. So that's creating a challenge for corporates. So that's another area where they've given a lot of instructions, internal instructions, to make sure that any tax dispute is not really being kept with multiple years, with impacting the existence of the company itself. And then we are seeing that the overall assessment process itself, as you would have seen, it's all through random selection, automated process. So not many returns get processed, not many returns get are considered for scrutiny assessment. Very few returns are being considered. So that itself is helping, because once you file the returns, you should be able to get most of the cases where there won't be any adjustment at all. So these are the significant steps that are being taken. But what we see would be a critical need is that with the complex business structure that's evolving in multiple sectors, right? If you look at technology, if you look at retail, online retail. So if you look at those structures, it's quite complicated. And when it goes for assessment, right? I don't think there is enough thought process into the operational aspects of the business and understanding the structure of the business. Within tax department, there is a technical group that is there that looks at the technical aspects of the issues that are there. But I think it would be important that they create a cell whereby the different stakeholders are being involved, right? To get an understanding of the sector and industry, create a thought paper and give some non-binding opinions to people so that everyone gets a good perspective of how the department is looking at. Right? Today, if any company, if there is a complex structure, they would look at one piece of the transaction without really understanding the multiple elements that are there in the overall construct of how the goods are being taken to the ultimate customer. So I think that's one of the steps that should be taken. That is the concept behind this faceless assessment. Eventually, you would look at company. Today, it is all alphabetic based assessment, right? The companies are being selected based on the alphabetic alphabetic data. But going forward, it would be sector and industry. You would see that department would be taking up the issues across the sector, which would be helpful, because then you know that there is a common issue which needs to be addressed. I think that's what we are looking at in future. But a lot of proactive steps need to be taken. Still India is perceived to be quite complex, and when a company looks at the investment methodology, normally they put different weightages. And when they put the tax as one of the element, right, India ranks quite low. So because of that, they don't look at other benefits that are there in India. They just go by the weightage. They would see whether you're getting 8 out of 10 or 7 out of 10. Whichever country gets a better ranking, they would go for the investment in that country. I think with China +1 now, there is great scope for India to leap further. I think that steps are being taken, but there should be a lot more that should be taken at the tax administration level. I think that's going to be quite critical, because the interpretation issues should be brought down. Government has been talking about direct tax code, like how GST, finally it got introduced. Direct tax code is another one that has been in discussion for a couple of decades now. And the challenge that we have is that, I think, is that because of the pressure on the revenue collection, as you would know, the overall tax collection against the GDP is only 11% in India. as compared to other developing countries which are at 22%. And if you look at OECD countries, it's around 33%. So we are far behind. It's because of the complex structure of India, because we have significant portion of the GDP being contributed by agriculture, which is not being taxed. So our system is quite complex. So our tax revenues, though all of us feel that we are living in a high tax cost structure, the overall contribution to the government is quite less, right? The number of taxpayers is around 8 crores in the population of 130 crores, right? So that's a very insignificant number. So these are all the things that are unique to India, which is putting pressure on the government. So what they are trying to do, the direct tax code draft is getting circulated. So, but eventually they are not able to shift because they wouldn't know the financial impact. As Mr. Vaidhushan mentioned, they are now become tech savvy and they have very clear understanding of the financial impact whenever they do any changes in tax laws. When they do any change, they look at the impact of that change and then decide whether it should be made or not. But when they are looking at direct tax code, in all probability, they may not know how it would be really reflecting in the revenue collection. So consequently, what they are trying to do is to pick and choose whatever is relevant and then try to address some of those issues, right? Even though this government promised a lot when they came into the power, they promised a lot. One thing they tried to do is that they couldn't really replace the laws. They have tried to dilute the impact of laws, right? If you look at POM, that is Place of Effective Management, GAR provisions, they're diluted to a great extent, but they are not able to remove those provisions from law. So there is always an apprehension that the tax authorities can use any of these provisions at any time, at their will. So that's a concern that would always be there. And today with no clear guidelines, when you take any transaction, undertake any transaction, you wouldn't know what kind of tax issues you would get on account of GAR and others. So a lot of steps are being taken. I think it's all more done at the influence, the need that is there, but the basic structure of the administration and tax laws would require a significant change to give comfort to the investors.
Thanks, Rajesh. Interest of time, let me quickly jump to Anandi. Anandi, you have to answer something based on which people here will decide whether they'll go back to office now or go back home. So who are senior professional accountants? Who are those guys who have to go back to office and then be careful? And the rest of them will say, okay, we'll go home and spend the evening. So who are they?
So yeah, coming to the definition of senior professional accountants, in practice, it's a no-brainer. Of course, the partner who is serving the client will be responsible to report on any non-compliances that they observe during the course of audit. And of course, the senior manager or director, the next in line who's supporting the partner will be responsible. But when it comes to professional accountants in service, I think that is where the question comes up as to who is responsible. So this has been defined in the code. They have very clearly articulated that this will be, in short, key managerial personnel in an organization. Who is a key managerial personnel? Those who have the responsibility and the ability to take decisions on key matters such as either acquisition, divestment, whether to enter into certain contracts and agreements, decide on certain business lines that the organization has to take, strategies, business plans, cash flow projections. So in short, it will be, if the MD or CEO is a chartered accountant, it will start from him or her. It will come down all the way to the group CFO, the CFO, and probably the finance head, the internal audit head, the taxation head, the direct tax head. So whatever laws and regulations all the three gentlemen spoke about, whoever is responsible for monitoring and implementing rules and regulations around that in the organization precisely will get covered under the code of ethics. Practically, you just look at it. People who hold this key managerial position have repository of so much of information on what's happening within the organization. It could be as simple as signing a contract, giving a bribe to somebody, or structuring the contract in a particular manner so as to gain some tax benefits. It could be anything as simple as it, or it could be very complex, like like a bribe which is being paid, or there is a fraudulent transaction that comes to your attention during the course of your service, how do you deal with it? Means you can't now turn a blind eye and say that I am not responsible. Anyways, it's been reported to those charged with governance and they are dealing with it. So I'm no longer responsible for this. So I think with this code of ethics becoming applicable from 1st October, none of us can take a shield under this and say that I am no longer responsible. So you shall be responsible for any non-compliances that you observe. It could be coming out of your internal audit report. Your internal auditor will be giving you several observations which will talk about non-compliances with certain laws and regulations. Say a license has not been renewed, then how do you deal with it? You can't be silent, and you can't say that it will be dealt by the person who is responsible for addressing that particular action item in the internal audit report. It will become your responsibility to understand what that non-compliance is, how does it impact the organization, whether it is material or not, and how is this being resolved. So everything is now becoming onerous, and I think all the senior key managerial personals in this room will understand the gravity of the responsibility that has been cast on us. And as Vijay Kumar sir said, you can decide what you want to do, go forward. Thank you.
So Gopal is come, for whom NOCLAR is applicable. Okay. So Prathamesh, see, all of us have experienced that almost every organization is now aware about ESG. Entrepreneurs, there's so much of media communication and others. I think across all industries, irrespective of the size, there is that awareness of ESG. But I think what most organizations are struggling is, how do I go about it? What do I do for it? What are those 3-4 things I need to do? Is it something like I can move from 0 to 10, or can I follow a phased approach over a period of time? Can you share your experience and thoughts on how you have seen various organizations embrace ESG?
So we always suggest that, ESG is not a one-time activity. It's going to be an ongoing activity. And you cannot move from a scale of 0 to 10 in a year's time. It's a journey. It's a phased approach. So how you want to start the journey is very, very important. And to do that, there are 3-pronged approach which we typically recommend to our clients. One is, what is the strategic vision you want to set for your organization when it comes to ESG? So what is your vision looking like? What are the objectives you want to set? How are you planning to achieve those objectives? So how are you planning to internalize ESG? Yeah, to ensure that what are the kind of controls you need to have in place? What are the key performance disclosures or indicators that you want to start monitoring? And to do that, do you have a relevant skills available? Because many a times what we see is the organization wants to take a leapfrog approach, but they don't have the relevant skill sets available. So are the skills and competencies available with us? And the last thing what I always suggest is, how do you externally engage with stakeholders and also communicate about your performance on a periodic basis? So these are the 3-pronged approach which I suggest. Couple of other things what I also suggest is, a lot of important aspect is on what is the tone at the top. If the tone at the leadership is very clear about ESG, things starts falling in place. Yeah. The second thing which we always look into is, how are we looking at the larger purpose? Because if we look at ESG, it's not only a transactional activity. It gets aligned to your organization's larger purpose and vision. The third thing is, are we using a common language? Are we bringing in all the functions together? Because there's one area where right from the HR department to the marketing department to the legal department to the compliance department, everyone will have to contribute. So how are we using a common language to bring them together? Once we bring them together, are we clearly aligning their thought process with what the vision is? So how are you communicating them your thought process? Once you start doing that, are you implementing the actions? Because every action what you take would have a positive impact on the ESG KPIs that you're out to achieve. So actions. After actions, are you responding it? Are you reporting it transparently, whatever good things you have done and not so good things you have done also? So how are you responding it transparently? finally, how are you closing the loop with your stakeholders? So the feedback from the stakeholders, after the implementation is over, are we trying to seek the feedback? So these are some of the small things that you need to start looking at it when you're planning your ESG journey. And as I tell, it's always, it takes a couple of years to get the maturity out here. So don't expect miracles. Don't expect, quick wins. Yeah, there'll be some quick wins which will come over the way. But if you want to stabilize your setup in ESG, then it takes a couple of years, and you should be ready for that.
Thanks, Prathamesh. And I'm conscious of the time and the fact that many of you would like to ask the questions to the panelists. I have 3 questions more for each of them, but I don't want to do that. What I'll do is just for you to organize yourself to start shooting your questions. I'll use about 5 minutes, a quick rapid fire questions to each of them. And thereafter, you could start interacting with them. So by the quick, for all the 4 participants, rules of the game, 40 seconds reply. So first, has the input tax credit been able to stop the cascading effect?
Initially, yes, now no.
Okay. So
5 seconds. So I still have 20 seconds. No, because your vendor profiling has gone up. The provisions have changed so much that today, if you have 1,000 vendors, I know the kind of scale that is there. So if you have 1,000 vendors, you are virtually following up with each vendor to ensure that he pays the tax and files his return, failing which you don't get your ITC. That's not the intent of GST, but that's the effect of this new provision.
Okay. Thanks, Vaidhi. So what are some of the global trends which you're seeing in the area of direct taxation?
Right. So I'll just highlight 3 aspects. One is the transparency. So there should be higher level of transparency within the governments, right, with the governments, and also if you see within India, you would see that there is interaction happening between different authorities, right? So that's a tax transparency. Then the second aspect, non-taxation of income in 2 countries or 2 locations. So you want to avoid double non-taxation. Earlier, the situation was to avoid double taxation, but today the government is looking at avoiding double non-taxation. So that's the second element we are seeing. The third one is taxation of digital transactions. India has taken a step forward, right, with equalization levy, with regard to significant economic presence clause. So India is fast forwarding on the digital transaction. So these are 3 areas where we are seeing activity both at the global level and also at the India level.
Thanks, Rajesh. Anandi, what are the non-compliances with laws and regulations which are all covered under this area of NOCLAR?
So in short, it covers all the laws that we were discussing now: GST, income tax, ESG, any law and regulation under in this country that we will have to look into. More specifically into forgery, bribery, money laundering, the tax, any evasion of tax, any non-compliance for that matter, because it's a very, very wide topic. It includes any law and regulation which is relevant for your organization. So it's very far and wide.
He's actually testing me whether you are aware. No, understood. Right? Yeah, it was in the institute only it came. Yeah. So you were telling that you want to catch my neck. Okay. Yeah, but it's a welcome one. Welcome one. Why it's welcome, maybe I'll share if required. So I happened to be in the council when we decided to make this part of the code of ethics for chartered accountants coming. So as far as Prathamesh is concerned, we all know, and many of the MSME and others who still think it's applicable for large ones will start realizing that performance on the ESG will be very critical in terms of communication eventually. Because while it's a way of life, we also need to tell that I have lived this particular way. And there are so many frameworks also available globally. There's work happening in terms of standardization, etc. Now, what should be the steps a company should take into consideration while devising their own ESG strategy and thereafter for communication?
So it's very important to understand who are our stakeholders whenever we are planning for any communication aligned to ESG, because again, ESG communication addresses wide stakeholders, right from the investors at one spectrum to the community members at the other spectrum. And as Vijay sir said that, there are a lot of frameworks which are available in the market, and there is a lot of confusion around those frameworks also. So we always suggest that, you should have a single approach, which is who are your stakeholders? How are you communicating to those stakeholders? And to do that, are you prepared? So the 5-step approach, which I always recommend, is prepare yourself first. Understand, the spectrum of the stakeholders you're going to communicate. Engage with the stakeholders to understand that what they would be looking from your organization for communication perspective. Define your reporting content. Yeah, identify the material focus areas that each sector needs to communicate. Yeah, if you are in the IT sector, you need to talk about what is the diversity ratio, what is the, what is the attrition. If you are in the metals and mining sector, you need to talk about extractive materials and how are you, ensuring the mine closures. Also talking about resettlement and rehabilitation, if at all you have done. So based on the sector you are in, identify your material focus areas. Once you identify the material focus areas, collect the data with respect to that material focus areas. And finally, identify and plan your communication strategy also. So gone are the days when you can just release one report and you will feel that the stakeholders are happy with that report. Today, in this era of WhatsApp and digital communication, people are looking at periodic communication and a frequent communication. So how are you planning your communication strategy around ESG also makes a significant difference. So constant, consistent communication would be the way forward with the important frameworks which you need to align from the regulation perspective and as from the international markets perspective.
Good, thank you. So thanks, Prathamesh. That was pretty helpful. And as said, open to all of you, the most important participants in the event today. Yeah, go.
I have two questions.
Yeah.
One with GST and one with NOCLAR.
Name and then question.
Yeah, Vedaraman from Chennai.
Yeah.
With regard to GST, like the anti-profiting rules, like now CII going to look after the anti-profiting. Even the last 5 years, we did able to see a lot of anti-profiting measures controlling mechanism in place, like the manner in which they are enforcing the anti-profiting. So I just want to have a view on that.
See, we need to understand why that section came. If you look at the philosophy of 171, the government's concern was the GST rates could change, where the rate could come down from, let us say, 18 to 12, and the benefit may not be passed on to the customer. And then they also visualized the possibility of ITC benefit not getting passed on. Now, fundamentally, the anti-profiting authority seems to think that your entire ITC should be passed on. So, you're all accountants, please forgive me for explaining this, but ITC is only a benefit which kind of supports your tax outflow, and therefore, to that extent, whatever interest savings that you really get out of ITC is your benefit. So that can be worked out as a price reduction or whatever. But they seem to think that whatever you have as ITC should be passed on. And not only that, they compare your history for the last 10 years and say, in your old regime, you had X. In your new regime, you have 3X. Therefore, 3X must be passed on. I have brilliant orders where the authority has said that, why have you not passed on 16 crores to the consumer? The developer gave an answer saying that I'm yet to sell. When I sell, I will pass it on. But then the orders have been passed and we are struggling in courts. So NAPA has not been a very great experience for many people. But for some businesses which played around with this money, played around the rate of tax, there have been orders and they've also complied with it. Whoever has complied with it, you would know that there is something funny going on. And sometimes it is also impossible to comply with it. For example, the rate change in some of the chocolates and candy segments would be 0.35 paisa. So you cannot pass on the 0.35 paisa because that doesn't exist. So they tried to give more grammage in the chocolate to cover that. And the NAPA said, no, you have to give only in money terms, you cannot give in gram terms. So NAPA has been a very, very different experience. Now we are going to CCI. So my only hope is that CCI is already very busy. They have other big matters in their hands. And GST is now 5 years. I don't think you need that section itself. The purpose of that section was, initially you should not profiteer out of GST. That is gone. We are now 5 years into GST. Time for organizations like CII to represent for knocking out 171.
So I'll come back to you later, just so that everybody gets a chance. Just second, I respect diversity, inclusion and equity, but I'll come sequentially. Just give it.
Good evening to all the panel members. I'm Satyanarayanan from Kaplan Point Laboratories. At the outset, thanks for all the thought-provoking discussions. I have two questions to Mr. Rajesh Srinivasan. The first one is with respect to the 15% concessional tax rate which the government introduced for new manufacturing companies, which has a condition that by 31st March 2024, the manufacturing and commercialization has to commence. So my question here is, assuming the company complies with these conditions, any subsequent expansions in different locations across the country for genuine business expansion, will that also get covered under the 15% concessional tax rate? This is question number one. The second question is that in 2022, the government also amended the dividend tax applicable for foreign, that is dividend coming from foreign subsidiaries. Now they get taxed at normal rate, unlike the 15% concessional rate previously. So now, to be in a tax compliant and efficient manner, is it possible to get the funds from a foreign subsidiary to any of the fellow subsidiaries by way of an ECB or an equity in compliant with the FEMA and other regulations? Thank you.
Sure. So with regard to the first question, right, and there is anticipation that government might extend this from 2024. Whether it will be applicable to, see, the objective of this entire provision is to get the capital investment happening before that period. So looking at the objective, I think any future expansion which would be happening, I think would be a challenge unless the government clarifies that it would get extended beyond this period. So that would be looking at the objective of this. But going by the technical interpretation, you can say that the company is in existence, has started manufacturing. So company forever should have only the 15% rate. So that could be the other argument that we can have. With regard to the second one, I think that's an important one. You get credit when you distribute dividends back to the shareholders. So even if you pay 30%, when you distribute back, you can get it under ATM. So that benefit is available. If you are not planning to distribute dividend to the shareholders, then the alternative, I think getting back money into India as an investment, that won't be permitted. That is not currently permitted under the RBI regulations, because that would be like routing the money back from outside and bringing it to India. So that might be a challenging one. I think overseas investment is possible. Bringing it back into India could result in some complication. So you might have to go and ask for specific approval if you are looking at something similar.
Thank you.
Malini, please.
I am Lakshmi Malini, practicing chartered accountant. Thank you all. My question is, Vaidishwaran sir. Sir, is the demerged company, irrespective of the turnover, that the company has demerged last year, one company's turnover is less than 2 crore, another company's turnover is more than 100 crores, but by virtue of demerger, the less than 2 crore company's turnover is increased to 50 crores, and both the company's turnover is, because of the balance sheet, is 50 crores. Do we need to file Form 9 and 9C for both the companies? How do we do that? Because there is no adjustment in 9.
What is your effective date of demerger?
It is, effective date is 1st April 2021. The entire 21-22, they took whole 1 year to demerge. 31st March 22, there are 2 companies balance sheet filed. But the GST returns filed in the single company name, which is the existing company. So how do we approach the GST?
See, most of these restructuring, whether it is a merger or a demerger, and specifically in the case of a demerger, when you have a resultant company, you are going to have these challenges in terms of the business that is going through. So whether you treat that the business has entirely gone through, because that is the effect of the demerger, or you still perceive that the business exists in the other company. If you're able to clearly draw a line and say that because of this demerger, this entire business goes, and therefore the turnover pertaining to that also pertains to that entity and should not be taken into account for this company, would be what was your right approach. Okay. Practically what companies do is they say, sir, I don't want litigation on whether GSTR 9 should be filed or 9C should be filed. For both, whether applicable or not, I will do. So there are, I wouldn't say it is wrong. It's sometimes a practical call is fine, because of late, the last 2 weeks, there have been notices from the state GST authorities for non-filing of GSTR 9 for a lot of companies. So this is picking up. If it's a very technical interpretation on what constitutes turnover, then you will have a case to always argue saying that, look, there is a lot of interpretation on what would constitute turnover for the purpose of calculation. Because even what is turnover itself is a big debate within the statute. what would constitute turnover. For example, if you are an agent with 5% commission, whether 5% alone should be taken or the entire booking that you do should be taken, that has already started as a debate. So you have grounds to argue in the case of a demerger.
So my question is GST 9 to be altered, the reconciliation part alone we can take it over in 9.
Yeah, 9 at least ensure you comply.
9, okay. Thank you, sir. Another one more question, sorry. Residential Welfare Association, more whether GST 9 and 9C applicable?
She is earning the maximum profit out of this investment in today's conference.
It's her question, she is unable to stand up.
Every assessee is what is the term that is used. So if you're residential welfare association, you're a service provider. What you should be asking is the council right in taxing residential welfare association? I would have preferred that as a question. What does a poor association do? 6 flats, huge square feet space, therefore the maintenance is more than 7,500. They don't see eye to eye. Ground floor fellow grumblingly pays maintenance because he's not using the lift. And in this process, the treasurer has to decide to pay the GST on this transaction. All the money collected goes to plumbers, electricity maintenance, lift maintenance, etc. Where is the profit in this transaction? Where is the supply in this transaction? Ideally, GST should not be there, but unfortunately it is there. Once GST is there, then all the act rules, everything comes to play.
Thank you. Yeah, please.
Good evening, sir.
I can have one more question, so whoever wants to, yeah.
Yeah, good evening. I am
Okay,
from
two.
industry. My name is Madhuvana. This question is to Madam Anandi. In case of when you are working in the industry, there are certain plannings or agreements are being made after consultation with the big peoples and other things. In such a cases, who are all the responsible under this act? Because there are certain people who provide this kind of the solution. You can go like this one, you can transact in such a way and all those things. And there are 3 or 4 parties involved in the decision. There is the external consulting agency, the internally the board, and the CFO, people like us. This one. So in these cases, where will be the responsibility? Whether all the 3 responsibility or the person who is being a part of that is responsible.
So under NOCLAR, unfortunately, you as the CFO being a chartered accountant will be responsible under this particular section of the Code of Ethics. So in the process of this negotiation and discussion, if you are uncomfortable with any of the decisions that are being taken, you shall be the whistleblower who will have to then react or respond based on whatever is the policy that is laid down within your organization. So therefore, it will be critical to have a policy for reporting on such non-compliances, because otherwise you wouldn't know how to respond if you come across any such instance. So you need to know whom do you need to report to, whether it is the first level of reporting could be the managing director or CEO. The next level of reporting could be those charged with governance, be your independent directors or your audit committee chair. That is something that will have to be laid out very clearly. And if you are not able to find a satisfactory resolution even after escalating to those charged with governance, you may even need to go all the way up to the regulator. So what are all the aspects that needs to be covered? Again, the Code of Ethics use the word material. So material is highly, highly subjective. So one has to define what is material qualitatively as well as quantitatively, and which are all the material non-compliances that needs to be reported, and what will be the levels at which this needs to be reported. All of that will have to be framed for you to have clarity on how you need to respond under specific circumstances. To answer to your question, if you are part of that discussion, you shall be responsible, because you are, if you fall under the definition of a senior professional accountant.
Yeah, yes. One more clarification. Whoever be saying the escalated party is also part of the decisions, then final where to go. Like whoever say the managing director or the board or this one, all are the part of this one, and for the business purpose, it is a decision. So the people in that case, what is happened to the whistleblower?
So you as a chartered accountant, in case, means all of this will come into force only if there is any non-compliance. Only if you are, if you become aware that something is not in compliance with the laws and regulations, it's your responsibility to share that with everybody else and ensure that you take the right decision. With that, it will end. But if it doesn't get addressed, that is when you will have to respond.
Thanks for clarification, ma'am. But still, practically, is possible. That is my question, ma'am. I leave it.
We don't have a choice, sir. We put it this way. So that's the rule of the game. Yeah, please. After him, one more question and his pending question. Yeah.
Just a comment to what Rajesh said on filing taxes, right, as individuals. It has been a sea change, but the issue is the sea is changed every year. So we see a new one every year, right? So it keeps getting modified. And my question is to Prathimesh. I am for ESG, completely endorse it, so does my organization. But see, we live in a commercial world, and our minds are tuned to see growth, and growth is consumption-led. And as consumption is going to be at the heart of growth, the way we see it, it's a central issue, I think. What is being done to address this so that it's a mindset change, right? I have to think that I can live with one mobile, and I need only one, that's it. But what is being done at the global level, at a scale which is material, to bring this thinking and change in mindset? And if it is being done, then who is doing it? Because I have not heard anything like that. Thank you.
So your question is very valid. We all are living in a materialistic, highly consumption world right now. But we all need to also understand that we have only one earth to provide us the resources, right? So if you look at the earth overshoot day, there is a calculation which comes up. The earth overshoot day, if you look at in the year 1978-79, the earth had enough resources that would last for the entire year. So 24th or 25th December was the earth overshoot day. Today, if you look at the earth overshoot day, is 21st July. And it's decreasing every year. Now, the questions we need to ask ourselves, is it sustainable? And today, you and I may not think, but you ask your children, they have a better answer to this. Their schools have started teaching them what is sustainability all about. The schools have started teaching them that how to protect the environment. So right from that generation, it is now creating the culture changes, the change in the culture is happening. At our levels, it's going to take time, but there is a change which is happening. Every organization you start looking into is trying to conserve resources. Today we have already moved from a condensate bulb to a LED light. Why? Because we see energy efficiency and we see the reduction in the carbon dioxide. Similarly, again, right now we're using the glass bottles out here, plastic bottles out here, but most of the organizations have switched back to the bottled water. So people are seeing the benefits out of it, right? The moment you save energy, I was giving an example to, during the break, the moment you conserve the energy, while I might put it in the perspective of, carbon dioxide emission saved. But look at your own organization. It's nothing but your operational expenses which are getting saved. So from that perspective, you start looking at it, there will be a change which will happen. I'm not saying that the change will happen overnight. It will take its time, but the seeds have been sowed and we are seeing the change which will happen for sure. Because we cannot survive in the materialistic consumption world which we are living in right now, because the resources are finite, we all know, and we need to take care of the resources. The definition of the sustainable development is to ensure that we live a good life, but at least ensure that our kids also live a better life, what we have inherited from Mother Earth. I'm saying forget our kids. Look at us from the 10 years down the line. The air, can we breathe the air right now? Not possible. Delhi is a great example. We all are looking at bottled water. When you and I were kids, we were drinking tap water. So the change is not for good. And unless and until this change which has led to the issues right now, if we don't stop it right now, we will not have a better lifestyle or better earth to live for the future. That is what I would say out here.
Thank you.
Yeah, over to you, but I could just add one point from my side. All that we need to do if we are to protect the environment is live like how people lived 30 years back, 50 years back. Reduce, reuse, recycle. In fact, most of it, if you look at it, there's so much of unwanted consumption. And we hardly reuse many of the things. And the recycling. If you go back, at least my childhood, and I can unhesitatingly say here, if there's food left over in the day, you actually would eat in the next day morning. You wouldn't have an hesitation. I think the last 30 years, we have spoiled a generation by saying that it's not a good one, you know. So I think some of those practices. Similarly, when it comes to water, similarly, when it comes to going to school, you know, children getting dropped to school 1 kilometer by car. I don't think any of Gopal, I don't think 1 kilometer by car. I don't think these are habits, you know. I think my own view as a society, you just need to look back and see how people actually lived. And I think we would have a great environment to hand over to the next generation. Over to you, and then last.
Good evening, everyone. I'm
I thought it was this question. Yeah, okay. I need to close at 4:45. Yeah.
Representing the VIT University, there we are buying electricity from the department, electrical TNEB, say for 8 rupees per unit, and we have shops inside the campus. There we are supplying to them at 9 rupees. So for the difference, whether we have to pay the GST amount or for the whole amount we have to pay the GST?
Or whether you should pay GST.
Huh? That is
See, electricity is goods, right from beginning, right from Supreme Court days of National Thermal Corporation. And today, you have notification 2/17, which exempts various goods, and electricity is exempted. So, electricity per se, whatever you sell, power is exempted. Now, in your capacity as a university or a mall, take any person who gets electricity from somewhere and then supplies it through a meter or something else to their tenants or somebody else, it is still the same electricity that is going, even though you have a margin to it. So it's no different. So for example, if milk is exempted, just because Vijay Kumar sold milk at 10 rupees and I sold at 20 rupees, it still remains the same milk. So it's still electricity, except that there is one issue with reference to a Calcutta High Court decision in the context of service tax, where they said that, not even service tax, they talked about the fact that you must have a license under the Electricity Act for you to do it. But mind you, yours seems like an innocuous question, but this is a mind-boggling question in the EV market. In the charging market, where you have charging stations where you park your electric vehicle and then charge it and pay for the power that you have consumed, whether the charging station has sold electricity, therefore it is goods and exempted, or the charging station has provided a service of charging your vehicle. My view, it is no different from petrol bunk. You know, petrol bunk, you still buy petrol. Just because you go and fill the petrol, it is still a sale of petrol. So it should be perceived as sale of electricity, but it is already a big debate going on in that industry. So my view is that it is not taxable.
But we have a sub-meter separately for the shops. So we can able to measure the exact units.
See, if you are paying it and you are comfortable in collecting from the tenant and your tenant is not grumbling, please go ahead.
No, I can go ahead only for the difference amount 8 rupees.
No, it is not a profit tax. It is not an income tax. If you are going to pay, you have to pay on what you collect.
But the department is demanding, GST department is demanding for the entire 9 rupees.
I agree. If you pay, it is on the entire amount.
We have to pay the entire amount.
If you pay, it's on the entire amount. If you don't pay, you have a case.
So we can fight for that.
No, you cannot argue that I will pay only on the margin. It is not an income tax.
No. We can fight that it is being exempted from the
Yes.
electricity. Is being exempted.
நான் கட்டறதே ஜாஸ்தின்னு சொல்லி argue பண்ணோம்.
Okay, one more point, sir. So we have old buildings in the university which we dismantled. So on the dismantled, we got tenders and we got the one who give the maximum amount. We give the tender to them and he paid the money in DD, demand draft. So whether we have to pay the GST, sir?
I don't understand why he is charged you GST, right?
No, he paid the amount for the dismantling and clearing the debris.
Okay.
For all these things,
so you paid somebody to.
No, he paid to us for clearing the debris and dismantling.
So theoretically, you have sold scrap.
Yes.
Accounts, it's revenue.
It is a revenue. Whether
GST varum.
So whether an individual, if the same thing apply when an individual dismantled his old house and collected the amount.
Individual advantage is that it is not in the course or furtherance of business. Because supply under GST, the activity must be in the course or furtherance of business. But you are already registered as a GSTSC.
But individual also is only an individual, normal living in the house. Being an old house, he is dismantled.
Individual will not be taxed. For example, individual, let us say she sells her old jewelry. She won't have to pay GST on it. An individual is not engaging in business when they decide to do a random act of selling of scrap when they demolish their old building. Okay. But because you are in a university and you are already registered in GST, you will have a problem.
For that activity, we have not registered. We have registered for various other activities.
One number is enough.
Okay,
One
one
India,
more
one
final
number.
question. One final question, madam. Madam, this act you told is applicable to chartered accountant or cost accountant also holding the position of chief finance officer?
So this is by the Institute of Chartered Accountants of India. So
Okay.
this particular act is applicable only to chartered accountants.
So though cost accountants holding chief finance officer post is not coming under this
So
act.
that will come in the future.
Okay, thank you, madam.
Yeah. So just last question for you.
Yeah, good evening, sir. Actually, there is a series of questions that are there to madam. You said that this NOCLAR is applicable from 1st October 22, right? So whether the non-compliance subsequent to the date to be reported, what is the time limit for reporting? And suppose in case the non-compliance is rectified subsequently, whether to be reported, and what is the repercussion or consequence for if we miss to report?
So this is become applicable from 1st October, which means you will become responsible from that date. The event could have happened before or after, but as long as you are aware of it, you will have to ensure that it is getting appropriately addressed. Is there any timelines? No, there is no timelines. You will have to exercise your judgment and take necessary action to ensure it is getting addressed. Consequences, of course, you will be subject to disciplinary action if this comes, means if there is any whistleblower or if there is any event which later on it comes to light that you were aware of it and you had not acted upon it, you will be subjected to disciplinary action. Sir, you can add anything further on
nothing
this.
to add.
You are the author.
The
Sorry?
compliance is subsequently rectified or no? We need not report.
Yeah, you need to maintain a documentation in terms of what came to your attention, what action did you take, how it has been satisfactorily addressed.
There is a structure and framework is.
So that is something, yes. So
Thank you, madam. Thank you.
So thank you all, and a big round of applause to all the 4 panelists. I actually wanted to keep about 5-7 minutes for me to give a concluding remarks, but I realized that we have just passed more than 450 as well, and I'd like Gopal to take responsibility of concluding. I'll just like to share one point alone, that when this session was conceived, I've always come across panel discussions where it was single topic and 3 panelists or 4 panelists. So here it was a single session, but there are 4 different subjects. So I was not sure as to how it will get moderated, how the people will connect and interact. But I think full credit goes to all of you for having, you can applaud, because credit goes to them for the way all of you followed the introductions which they made and the responses they've given. So thank you all for being such a wonderful audience, and thanks Gopal on behalf of all of us for so beautifully handling the conclave and to the team at CII as well. So thank you all and best wishes. Okay. Okay. So just in terms of conclusion, let me share my thoughts on each of the 4 topics. First, I'll try to keep it as brief as possible. I'm a strong believer that GST is a digital transformation for the country, and its potential and the way the government has administered, why they brought it up so beautifully, that whether it is that tax rate exempted without input credit, the way they have used that law for implementing seamlessly, I think we need to give credit to the government and credit to the industry as well for so beautifully implementing it. If the industry had not absorbed it and implemented so beautifully, I don't think this kind of a collection should have come in. The first 2 years, I think there was lots of excessive reactions. But if you look at the recent past and all, the department has also been extremely mature in terms of the way notices are given, interactions are held. They're trying to do their best in terms of promoting discipline. They want businesses to be in a disciplined manner. Somebody who is indisciplined should be punished so that the disciplined are recognized. You should not allow the indisciplined people at par with the disciplined ones. So if somebody is not filing a return, etc., I think that discipline is important. One part. I think that's a very transformative law, a welcome change. Of course, there is scope for improvement and it's a journey. And on the direct tax as well, there's a lot of work to do, of course. On NOCLAR, I just have this following thought. For the CXOs or KMPs who are chartered accountants, my view is that as chartered accountants, people always look at you with respect. People look at you as a knowledgeable person. I have not come across a single instance where somebody sees a chartered accountant as a less knowledgeable person and somebody who is to be respected less. So what the society is expecting is, look, you are a CXO, you are a chartered accountant, we are trusting you to ensure that business is being done in compliance with the rules of the game, And it is in that context that those laws are there. Business organizations, as long as there is no malified or intentional non-compliances, no malified or intentional non-compliances, those cases, the senior professional accountants will not be held responsible. And at least all of us here in the room can take pride that we work for organizations which are well governed and who have a desire to improve their governance levels. So for us, I don't think we should hesitate in that. My view, there would be organizations who would like to have chartered accountants at the helm because they have that additional accountability. It adds to the governance premium which organizations will earn. As far as cost accountants are concerned, it's a matter of time. The code of ethics comes from IFAC, International Federation of Accountants Code of Ethics. Institute of Cost Accountants is also a member of IFAC. So it's a matter of time. That membership focus is a little different now. So maybe at some point of time, they would also adopt this. My view, these are important to live up to the expectations of society. If you don't stay relevant to the society's expectations, society will ignore you and find alternatives. And on ESG, my simple submissions are as follows. While it's extremely important that we all should be conscious of environment, social governance, I just look at it from reverse order. Governance, it's in our hands. All of us can put our best efforts to ensure good governance practices. It doesn't require to stand upside down. It's just the individual ethos of the top leadership, and governance can be compliant. So out of ESG, 1/3 is taken care. As far as society is concerned, any business model will succeed only if it is relevant to the society. If the business is not relevant to society, just recall that Ashok Leyland ad which was paid throughout the day. One thing which appealed to me most in that ad, I saw it maybe 8-9 times today, that school bus ad, children going. So the focus is on children safety and all. So that's for the society. You do something because you want to stay relevant to the society. Any product or society or service, if it is not relevant to society, it will automatically die. So you need not tell an organization that you have to do something, you have to do this. They will do only those things which will help them to live in the society. Otherwise, it will be a short journey and thereafter they'll become extinct. That's on the society part. On environment, just two things, which one, I told you, just need to practice some of the habits which we followed in the past. I'll give again a very personal example, and I have no shyness in telling this. Let's take an example. I was invited for a seminar on a Saturday morning. I would have worn a shirt for that seminar. Half a day up and down, I would have worn it. I have a choice of putting it for wash, use water, etc., or choice for ironing it and using it for one more day. I have always, and unhesitatingly now, also use it for the second day. That's something part of the culture we have been used. So that's water. So we've been used like that. So whether it is with reference to drinking water, you have to just finish off and not leave half empty. I think some of us have been used like that, and every drop makes a difference. And as business organizations in India, if you look at the pollution laws, etc., they have always been focused on ensuring that good practices are there on the environment part. Renewable, etc., India is not substantially behind. So India is, I think, maybe in terms of the, at least if you take solar, we are probably 4th or 5th in terms of the solar capacity installation, and growing pretty fast in terms of renewable energy consumption. So while these are very important things, the point I want to highlight to all of you is that on ESG, please don't look at it as a reporting initiative. It is not reporting initiative, it is a way of living. How do you live your organization? One thing you should all be careful is, if you make a wrong reporting, that my water utilization is only so much, I don't employ child labor, whatever kind of thing. And tomorrow, if any vendor or somebody discovers, the damage to your organization will be far more. People think it is unaudited. They think sustainability report, ESG report is all unaudited, BRSR unaudited. So I can give whatever I know. That's not true. BRSR is part of your annual report. It's board approved. And if tomorrow something is found false and somebody says, I invested thinking that this company is in the right direction of ESG, whereas fact is something, it can be a huge litigation as well. So please do not fall into the temptation of take a competitive company who is done ESG reporting, copy paste, and you also do it and all. Please don't do that. I am coming across many companies do that. We call it greenwashing and all. Please don't fall into the trap. If you tell that this is my current level of water usage, employee diversity, all those kind of stuff, doesn't matter. You travel over a period of time. That's the only input I have. So thank you all for being wonderful audience, and thanks Gopal for this opportunity to conclude. Thank you. And thanks to all my panelists. I enjoyed being with them. And I request everyone to please bear for a few minutes. Gopal will do the conclusion. Please bear. So we get extra screen time or we go there?
No, actually, thank you very much, MPV. I don't think a formal vote of thanks was actually on the agenda, but I just was reflecting. I had to go out urgently and come back. Maybe it was the topic, managing challenges and driving growth, because I had to get into an emergency meeting, which was to manage the challenge, drive within the speed limit, reach on time. And it was essentially on something on the growth initiative of the company. So I said, it can't be getting more topical than that. Sorry for that, I had to rush it. It was a totally unplanned meeting, but if some of you ask what would have happened if this meeting happened in Bombay, I can only say thankfully it did not happen in Bombay. So thank you very much. I think this was a very exciting panel, and all of you having accepted it without any doubt, immediate to take it up. And while MPV is always gracious and acknowledges the contributions of others, he hardly does for himself. He has been the soul of this entire, of this session. Full credit to him. And I must thank each of the speakers who actually contributed well. It was a very interesting session. I wish I could have just come just in time for the beginning itself. I think the day was good. General feedback has been that I got some WhatsApp, etc. I think the feedback was good. We had the honor to host the TNFM, and I think it went right from the beginning that it was a great start, and then we could get a host of other luminaries to also participate here. The topics also, the 4 forums were also, I think, pretty good, including the world economy. And then, of course, we had CEO-CFO partnership, which was a little more of informal thing. The afternoon, I missed the one on digital, which was very close to my heart. But unfortunately, the meetings went on. And finally, I was able to catch up with this session. The only thing I could say is that this was like me watching Ponniyin Selvan with my family, because I missed the initial 10 minutes of the movie. But thankfully here I could get the plot because of MPV's encapsulation at the end. Thank you very much, and I must also thank all the other sponsors who kind of helped to put together this program. And of course, both Mariyappan and Tulsi Raj, they deserve a big hand for putting together this. And it was there's a lot of changes that were happening right from getting this hotel was a big tension. We never knew that the economy was booming till we found that the hotels are not available. Everything was full, as if, people only want to celebrate in hotels. So it was actually, and then of course, all the other people who have actually helped us to get the connections, get the speakers in. So actually for the last set of speakers, I'm say Anandi, Prathamesh, Mr. Vaidiswaran, Rajesh, MPV, I think everyone, a big thank you, and look forward to the next year's forum. And I'm just wondering what will be the topic. Thank you very much.